Hey, what is up, everyone? Welcome to Market Psychology 101, where we look for value in the markets when there's fear and are cautious when there's greed. In today's video, we are going to be taking a look at some of these stocks whose earnings reports have come out this week. Take a look at the technical analysis for some of those stocks that I might like or use, and see if there's some decent value, give you guys some ideas, because sometimes certain good stocks to invest into are stocks we don't even think about. It's easy to think about stocks like Apple and Amazon, very popular products that we use and know about, but sometimes we forget about other products, maybe like Costco or Kohl's, Foot Locker, auto parts stores, etc. Let's go into fear and greed. And on CNN, we have dipped down into fear. So maybe there's going to be some value around the corner. These fear and greed indicators, they can be leading indicators. And so sometimes the better value is still coming. We'll see where we're at in some of these charts. And on pie vesting, you can see right here we are dipping back down towards that neutral territory as well. It does say greed because we're above the 50 line, but if it gets underneath, then maybe a flip in the trend's coming. Maybe the stock market will, or the S&P will have more than a 5% correction, but we'll see. As far as the earnings reports for this week, when I take a look at this, I look at, okay, what are products I know about, maybe things I like, I use. I'm not in college anymore, so I don't wear American Eagle, but maybe we'll take a look at that. I remember, I think it was Abercrombie a year or two ago, all sort of ripped up. So if you're a young kid and you really love American Eagle and you've done your research and you like it, maybe that's one we take a look at. But Dick's Sporting Goods for sure. Advanced Auto Parts, I'm curious about them because AutoZone is a very strong looking stock. There's Abercrombie, CHWY. I know that one's been sold off big time, so maybe that is going to have some good value. We have Kohl's, Costco, that's a very strong stock. Dollar General, I remember maybe it was last year, people were hyping up the dollar store stocks. Curious to see where those are. Ulta, if there's any females out there or people that like using their products, maybe take a look at that. Best Buy, I'm curious about them too. So yeah, we'll take a look at some of those. Maybe even Hormel Foods. Again, these are sometimes stocks that we take for granted and don't even really think about. HP as well. So there's something to get into. I'll try to be as quick as I can. You know how bad I am at keeping that promise. Anyways, let's start off with the S&P 500. I've taken a look at that, guys. I've shown you this channel. Here's the upper end of the channel when prices have hit their highs, as well as down here when they hit their lows. So we're right about in the middle. And I drew this line here as well because we are in this parallel channel. And should we break through it, the next area of the S&P I'd look for somewhere around this 6,000 level. Will it get there anytime soon? I'm not so sure. I think it is possible that maybe it comes back down to this 20 moving average or maybe even the 50 at around 4,800. So those are areas to watch for should we continue in a bullish trend. Now, when we get under the 50, that's when we reverse the trend, at least on the weekly, and can really look into a lot of good value in the markets overall. So those are some things to watch for the S&P. Let's look at the VIX. The VIX is spiking up a little bit. So the VIX is the volatility index for the markets. And whenever the VIX is at 25, 30 or more, you need to be looking like a hawk at the different stocks that are out there. There should be a lot of good value out there whenever it's at 25 or above. Sometimes we get insanely good value. This was the COVID spike, obviously, and here was the great financial crisis spike. And you can take a look at some of these other ones over 40, these ones over 25. So we're still overall at low volatility, still in this downtrend, lower highs, but maybe this is where we start going sideways and possibly start going up. So do watch the volatility, still low volatility overall. And right now we would be, if there is any good value in the markets here, as we talk about looking for when there's fear, that maybe these values might be something just to dollar cost average into lightly. Taking a look at the US 10-year versus 2-year, this is the yield curve inversion. And when this is under the zero line, we have a yield curve inversion. And the longer this goes for, typically the worse recession that is around the corner. We've been inverted for a while. And until the Fed is going to cut rates, we're probably going to stay down here. And once it uninverts, that's when you should be concerned of the markets eventually finding a bottom, turning bearish. At least that's what's happened in the past. So we've taken a look at this in other videos. I'm just going to glance over this very quickly. But within a year and a half of the uninversion, when it's gone up, the markets dipped about, again, a year and a half, 2 years later. So that's with the uninversion, and it typically uninverts within a month or two of when they cut rates. And as you can see, we're nowhere near that, and it's even looking pretty red down here. So maybe it's going to get under that 50-week moving average and move down. We'll see. Unemployment rate, it is overall in this uptrend, but right now it's not spiking, and I don't think we would see it spike. The Dow Jones, what's interesting to me, let's zoom in a little bit. Let's go to the daily here. On the daily, you can see the Dow is possibly, let's get rid of that fib too. It's possibly going down to this 200-day moving average. So maybe we'll see a strong bounce in stocks when the Dow bounces off the 200. I'm curious. Yeah, the S&P is still up a little bit higher. Maybe this one just comes down to the 50 or even the 100 right there. So just some areas to look for. Now let's get into some of these stocks that we were looking for. So let's start off with, are there any here that I want to look at? Not so much. Let's look at Abercrombie & Fitch. I'm just curious. We're going to be very quick with this. Abercrombie & Fitch. Yeah, this it's so funny to me how this stock is just blasted off. Like, who knew? Anyways, the market cap at around $9 billion. But if you bought this late 22, around $16, it's done a 10x. It would be profit taking time, in my opinion. It's gone above this 4236 line. Abercrombie & Fitch, who would know? This is an even stronger looking stock than NVIDIA somehow. So I wouldn't be touching this one with a 10-foot pole. One, with how overextended it is. If you did buy down here, congratulations. Not financial advice, but I would seriously consider taking profits. We're talking about frickin' Abercrombie & Fitch. The store you can always smell when you walk past it. And, I know nothing about the balance sheet with this one, but yeah, this thing is very overextended. It has ran hard. A 10x at least inside of a year and a half. So do be very cautious on this one. The other one we wanted to take a look at just to compare American Eagle, AEO. Let's see if this is anything like Abercrombie. Kind of similar, not as strong of a move, but was down here at around 10. So yeah, only a 2x. But even just looking at the chart, I'm not going to waste time drawing a fib. You can see here on the daily, it might come down to the 20, or on the weekly, if it did hit the 50, again around the 20. So sell signal, play it out. Just looking at this one for pure curiosity, nothing I would invest into. I am very curious about CHWY. I use their products for my pets. I like their service and their product. Overall, it's pretty good. Let's take a look at where the chart is. Now, I have not looked at any of the balance sheet for CHWY, and we can go, I'll just do it for this one. So Market Watch, great site. Let's take a look at CHWY. I'll only do it for this one, but let's take a look at it, and I'll just show you where to start. So if you were to go to Market Watch and take a look at the balance sheet, no, I'm not going to pay for anything. You click financials, and then balance sheet will pop up underneath it. And what's nice is they highlight the important areas. And there are a bunch of things you can look for. You can get into the weeds as much as possible. And there's probably amazing tutorials on how to get into the weeds in other videos on YouTube. I'm sure they wouldn't be hard to find, but some things you can look for is just the trends of the numbers. Are they looking positive? Are they looking negative as far as assets, you can take a look at total assets or total current. I like taking a look at total current, and you want to have a positive ratio from the assets to the liabilities. So 2.1 billion, positive trend. Total current liabilities, 2.1, also a positive trend. So that is a 1-to-1 ratio. It's even a little bit above that, like in the 10 million. It's like 2.11 billion. So that's at a ratio of 1. I don't love that. I do like how the assets are growing, but I don't love how the liabilities are growing. So do your research if you want to get into the weeds on that one. The higher the ratio, the better from assets to liabilities. And should you get things, 2 or 3 or higher, those can be good things. But again, do your research. But the reason I want to take a look at this, I mean, after COVID, all the stimulus money that came in, it got up to 120, and I've been wondering if this thing's been forming a bottom. And look at this strong move. Looked right up, got rejected off that 50-week moving average. Let's take a look even at the monthly. That is a very strong monthly. There is a green dot down there. Monthly buy signal. So if you really love CHWY and you want to just dollar cost average in some money on it down here, I would not blame you. As far as value goes, it's a $9 billion company right now. But again, do your research. Consider all the positives and negatives that is out there before you put your hard-earned money into this. But on the weekly, look at that. So I want to be fair, though, in my assessment of this. We do have lower lows, lower highs. I would not doubt if maybe it comes back down. Now, you never know truly where a bottom is. This thing may just be continuing to fall through the floor, and you can see this fib. Last time I drew it, it wasn't even down that low, so now we have to move that. But it is possible this move is just another fake out, and then it is going to come back down here. So, if you're willing to be patient and buy at lower prices, sure. How many people, I wonder, how many people are buying in here, with the higher lows and the monthly buy signals just for it to come back down. So again, the way I look at buying in the stocks, I take a very patient, value-minded approach. And if I love CHWY with all the research I was doing, I would be dollar cost averaging in here. Now, if it were to go down another 50%, I would be still dollar cost averaging in more. But before I would want all the research to show me that it's worth dollar cost averaging into. And sometimes these companies, you might not see profits for a couple of years or more. So take your own risks. The strategy isn't always going to work. So I'll say that too. And you got to put your money where your mouth is. With the higher risks can come higher rewards. As far as the chart, I would wait for, me personally, I would wait for better structure. I don't like how this is still downwards. I would wait for more sideways accumulation, but we do have that monthly buy signal, and that's at least one good sign. Let's take a look at Dick's Sporting Goods, DKS. So Dick's overall, yeah, I do like their store. I get a lot of things from there, and you can see it's gone from 100 to 200. So look at this. Came down here. It got above the 1618 at 197. Got above, came down to the 20 moving average. Very strong weekly buy signal. And look at that wick, though. So overall, I do like how it wicked higher. The next target, the 2618 for Dick's, would be at around 299. And that would be an area to look for. So should this continue to be bullish, that would be my target. Now, if it did get bearish and come down, then you take a look at this 50 moving average at around 163 on the daily. Now, look at how strong it bounced off that 100-day moving average. It just went way up. And right here on the daily, it has a lot of price structure. It has a lot of support here at the 1618 at $198. So even if it did get bearish, come back down here, I think this is some pretty good, strong support. But yeah, we'll see what Dick's does from here. Right now, looking like a very strong upward moving stock. Advanced Auto Parts. I'm curious about this one to see how similar or different it is from AutoZone, AAP. Not sure if I've looked at this one before. So Advanced Auto Parts, my God, look at it. Look at this. This thing just fell through. So got all the way up to 243, and it's come way back down. Let's go out to the weekly. Man, yeah, so here after you can always tell where the COVID crash was. It looks the same on a lot of stocks. But after crashing down under 90, let's just say 90, if people got in over there, almost did a 3x, and then fell through the floor. It's even below its COVID bottom, so don't love that. If we are to draw a fib from the prior high to the prior low, make sure our fib is on log scale because we're looking at prices between our prior high and low. Is looking pretty bearish right now. Is it possible this is a base? Sure. Or, we still have lower highs. We did get this section of higher lows, but it's coming back down. So if it continues to come back down, it's possible this thing just keeps falling through the floor. It has a 4.13 billion market cap. Do your research. Are the liabilities greater than the asset? Is this company struggling? I know nothing. I'm not going to pretend to, but at least as far as the charts go, this isn't looking great. Let's even look at the monthly. I mean, my God, it's underneath the 200-month moving average. So, one of two ways to look at this without knowing any research about this is either this is crazy good value. We do have a monthly sell signal here. So this could take a bit to play out, and we'll see. Now, if this monthly sell signal plays out and goes here, just stops and forms a higher low, then hey, maybe you found a base. But back to what I was saying, a couple of ways to look at it is maybe there's crazy good deep value here, or the stock is dying. So do your research. You might find great value on this one if by the end of your research you really like what you see. But it does have a monthly sell signal. I'd wait to see this play out and then see what it does. Is it going to be a lower low or higher low? We'll see. So, of course, take your own risks, do your own research. Any others here? BMO, I think they have a stadium in Wisconsin or something. HP, I'm curious about HP. HPQ. How is HP doing? So does have a monthly buy signal, but and it's been going sideways, and it's on the 50. So, those are some strong arguments for possible upward movement. Let's take a look at the weekly. What a strong weekly move. So HP came down, and it's been riding this 200-week moving average quite a few times. So if you were dollar cost averaging it on the 200, man, you're feeling pretty good about it right now. So very strong movement up. Look at that wick. Wicked all the way up to dang near 40, and it's a very strong wick there. So possible there could be some resistance here. And yeah, you can actually see, look at the dotted line way to the left over here where it matches up with that wick. So having a hard time getting above its prior all-time highs. And I would want to see candle bodies closing up here should it continue in an upward momentum. But it is a $35 billion company. As far as how HP is doing as a company, I don't know. But do your own research. It looks like people got some good value here, and there is some profit taking near its former all-time highs. I could draw a fib, but you already know what it's going to say is that as it got near its prior all-time highs, there's a lot of profits being taken. You know what? I've been talking about it so much, I'm going to draw a fib anyways. Let's just do it. I'm curious where it's come back down to. So on the fib here, you can see that it is come back down. It might even come down to that 618 area. And as far as the daily goes, I mean, it's closer to 786, but after that strong of a move, maybe it comes back down here. We'll see. Next, let's take a look at any other in here I want to take a look at. No, let's move over to Thursdays. So we have Costco. Let's take a look at Costco. Costco is one of the best stocks to dollar cost average into. I mean, look at I haven't looked at this one in a while. Let's redraw some fibs here just to make sure we're doing this right. So I'm going to go from this prior high to the next prior low. Curious. Just want to make sure we're doing it right. So Costco, let's make our fib off log scale because we're looking at price targets above that area. Costco got through this 1618 barrier at 737, came down to the 50 moving average, came up. Now it does have a daily sell signal. Maybe it gets down to the 50 on the daily. Weekly, it's still bullish, but if it came back down at 740 level, a lot of price structure, the 20 moving average, it could still be very bullish for Costco. But this is one of those stocks. It's at 353 billion. When you see, kind of like Apple, when you see it at the 100-week moving average, that's a rare time. Look how often it's even below that. Not since the great financial crisis. So should Costco ever get to the 100-week moving average, that would be a great time to dollar cost average in, historically speaking. At the 50, if you're dollar cost averaging in there too, not a bad idea. But look at all this accumulation in here and these higher lows, and this thing has just been blasting off since. So it's gone up from 400 to 800, done about a 2x since there. Really more 500, but yeah, 450, 500. So 1.5 to 2x. But yeah, one of the best stocks there is, very strong stock. And those would be some value areas to watch, like a hawk. But again, you might just take a strategy of, dollar cost average in, set a monthly budget anytime it's at or under the 50-day moving average, and increase your DCA as it gets closer to the 200. So Costco, great stock. Big fan of that one. Kohl's, curious about Kohl's. KSS. Used to shop at Kohl's a bunch as a kid with my mom. Kohl's, rest in peace, Herb Kohl, former owner of the Milwaukee Bucks. And you can see a lot of sideways here and a downward movement. So not looking great. 2.5 billion market cap. Look at this strong move in the late 90s. Went up with the the .com bubble, and it's just been going sideways. So if you bought Kohl's all the way in 1997, you're not feeling pretty happy about it right now. So that's kind of disheartening. There's some stocks out there, like I believe Ford's one. Here's another one that sadly it's just not paying off. So retail clothing company, what do you expect? I wouldn't be expecting huge things, but then you have Abercrombie for some reason with the way better stock chart than Kohl's. I mean, how does that make sense? Right now it is above the 382, and it is underneath a lot of these moving averages. Let's take a look at the monthly. Yeah, this thing's freaking shot. So COVID really crushed this one. Kohl's not looking so great. Another monthly sell signal playing out. So not loving that. I would be personally staying away from Kohl's, but you might be thinking of it as some possible super deep value, and if so, good on you. Foot Locker, just curious about. I don't shop there. You could argue good value, does have a monthly sell signal, and it is in the deeper range of that value, but this thing's just underneath everything. Weekly, it did just have a strong weekly buy signal, got rejected off. It got near that 100-week moving average, but came all the way back down to the 20 weeks. So that's what we got for Foot Locker. Not a sneakerhead or anything like that, but me personally speaking, like I've only seen Foot Locker at the mall, and I don't know how well they would be doing nowadays. Dollar General, I'm very curious about this one because I remember a lot of news was pumping these dollar store stocks last year, and look at that. So what was I talking about last year? People were pumping this crap up, and then it's been coming down. Another weekly sell signal. This thing is underneath a lot. It came up to the 100-month moving average and is being rejected down. So, when the 200 decides to appear sometime in the near future, it's probably going to show that we're between the 100 and the 200. But we do have a monthly sell signal. I'd wait to see that play out. Is it going to be a higher low, or is it going to be a lower low? So right now, not looking so great. This looks like one of those upward fake out moves, hit the 100 and is coming down. So I would not be surprised to see Dollar General form a base way down here. Does have a $30 billion market cap, so maybe take a look at it. in that sort of way compared to other similar stores, similar stocks, and can have an idea where its market cap is. But yeah, right now this thing is falling through the floor. I'd wait for a base to show up. But if you like Dollar General in the long term, maybe you're going to get some great long term value. Do your own research because, yeah, it's scary, but again, could be great value. I wanted to take a look at just a couple more here. Let's take a look at Best Buy and Hormel. And let's leave it there. We also have Birkenstock. What? All the 50-year-olds watching my channel just ears perked up there. Let's start with Birkenstock. Seems that that'll be a shoe that 50-year-olds will buy forever. Now look at this one. I had no idea how young or old this one is. This came out in October of 23. It's been out for over a year. Guys, so this is my philosophy on IPOs. IPOs make me nervous within the first 2 years. And the fact that it's still above its IPO price, I personally wouldn't be touching it. I've seen too often IPOs eventually fall through the floor. Now, if you were getting Birkenstock in here, congratulations. It's looking very strong so far right now. It's a $10 billion company. Maybe think of it something like, I think of the movie Wolf of Wall Street. Maybe you're thinking of Steve. This is this decade's Steve Madden, if you will. And just for curiosity's sake, Steve Madden. What was Steve Madden doing when it IPO'd? We're gonna have to take a trip in the time machine all the way to the early '90s. Yeah, look at this IPO. Wolf of Wall Street stuff right here. At around 80 cents, take down to 20, and then has been going up ever since. So, yeah, is Birkenstock like a Steve Madden? I don't know. Do your own research. But this one's still a baby, still at the upper end of the trend. I'd be willing to be patient, especially with an IPO. I give them 2 years and then I go from there because if you're gonna give yourself a competitive advantage with charting, I don't try to chase no matter what it is. Let's take a look at Best Buy and Hormel. We'll finish with those, BBY and Hormel. I would assume Best Buy is not looking great, but we'll see. So Best Buy, yeah, it kind of had this downward movement. Now it's going sideways. Do have some higher lows here. So maybe it's finding some strength. As far as on the monthly, does have this monthly sell signal. It's between the 50 and the 100. So this level right here at around 60, it would have to hold. We do have 60 here at the 200. That would absolutely have to hold. You can see what happens when it doesn't. It just falls through. So Best Buy not looking the strongest. Does have that weekly buy signal, but monthly sell signal. So we'll see if that is signaling a reversal of the trend. But Fib prior high to low. And right here, it's in this range between the 382 and the low. So hopefully, if you are in Best Buy stock, hopefully this one just goes sideways for a bit and then starts to find some strength again down the road. But $18 billion stock. Lastly, let's finish with Hormel, HRL. I want to keep this video under 30 minutes if I can. Whoa, Hormel, what's going on? Don't they make hot dogs or something? This one is at $17 billion. Yeah, not looking great for Hormel. If you were buying it way back here in 2015, you'd be pretty sad about Hormel as a stock overall. So look at all this strength after the pandemic. But now it's been going sideways for about a decade. So, you can take two perspectives on this. Maybe this is historical deep value. It has a lost decade here and it's getting ready to come back up. It hasn't gotten really that much underneath this $30 level. But man, look at that red candle. It hit the 50 and just sold down. On the monthly, this would be, a bullish case scenario that Hormel is at deep value not seen since the great financial crisis. And it is close to that 200-month moving average. And it's only been here once before. So that's a bullish deep value argument that you can take a look at with Hormel. I would wait to see how this monthly sell signal plays out because if it gets underneath here, look out below. But if you do your research and you really like Hormel, then it's possible 10 years from now, 15 years from now, you'll be thanking yourself for getting it at this deep value. So, yeah. Anyways, guys, hope you enjoyed this video on some technical analysis on this week's earnings for the earnings reports that come out. If there are any stocks you'd like for me to take a look at, please comment them below and I'll add them into the next video I do. So hope you're all doing well and have a great weekend. Take care.